Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 3:30 in New York. COMEX Gold has closed for the day, of course. Spot gold is still trading on the day. Oil is lower, equities lower, and so are the precious metals markets. First to gold, when we look at spot gold, currently trading off about $8 on the day, but more importantly, below 1100 at 1096 and change. It opened at 1103, had a high of 1108 and a low of 1094. So we're just a few ticks or dollars off of the low on the day. Traders, silver also trading lower on the day, off about 0.5% or 7 cents on the day, 1385 current print. That's off of a low of 1384. So we are just off of the lows in silver. So traders, what can we make of the most recent moves that we have seen in the precious metals market, specifically gold? And the one thing that we can say is we did have a rally. It was an extended rally which began at about 1160. There's absolutely no doubt about that. That happening at the end of last year, beginning of this year. The fact that it was able to actually trade over 1100, which is our 38% retracement level, and of course the retracement that we're looking at is a simple retracement from 1191, these most recent highs, down to the most recent lows at about, call it 1045. And so a move above this particular price point, one, it's a century mark, 1100, that's an important level, 1200, 1000, all of those levels tend to hold some kind of psychological importance, but it's also a fib level, as you can see, 1101, 38% retracement. And as I said, retracement from this top here to this bottom right here. But the fact that we were unable to sustain it, this was Thursday of last week, this last time we saw this market actually clip up. Of course, Friday we came down and we made this dramatic low almost equal to the low that we had on Thursday, but definitely the low below the open on Thursday, as you can see, but within ticks of each other. And then on Friday, the candle type that we got is almost a shooting star type candle. The only reason it would not qualify as a straight shooting star is the fact that it had an extremely long tail at the top. Typically on a shooting star, you will not have this kind of a tail here, but that's what we saw. And then of course, today's candle being a long red candle, it gives you that we have talked about on a number of occasions, and that variation is the variation of a three-river evening star. That's these three candles here. So we certainly want to watch what we see, but as long as this market is trading under $1,100 per ounce, and we have candlestick patterns which are indicating potential key reversals, and a three-river evening as well as a three-river morning are definitely candle patterns that can indicate critical reversals in trend, we could see this market come back under pressure. If so, we know that we have now resistance at 1100, former support, now back to resistance, and we, I believe, have some support here at 1080. Of course, we're still about $15 away from that price point. So as far as other markets that we do follow and that have a real interest because they definitely influence the price of precious metals, of course, dollar being one of the most critical of those components out. Dollar is a little bit higher. It is taking away some value to gold, but not that much. I draw your attention to this daily chart that I've just put up. It has the dollar index on the top, euro on the bottom. Support, we are pegging in the dollar index at about, call it 98, it's 97 and change. It is a 38% retracement from these lows down here at 93.80 to the top here just above 100. We know that we have real resistance at 100. We also have real resistance at 99. That's this 23% retracement, 98.90. Right in here. And so we need to see if this market on a technical basis will take this out. Of course, that would be the first level before being able to go back and try to test this area back at 100 that was achieved last year and came very, very close to overcoming it at the end of this year or the end of last year, beginning of this year. And lastly, want to take a look at oil this morning. Oil trading off approximately just shy of 6% on the day, just shy of a $2 drop per barrel in oil, trading at 31.21. And that's a tremendous drawdown, as I said, off about 6% on the day. If we take a look at the recent lows and the record lows, we have to really go back to this historical chart. And of course, on this chart, we are looking at oil as it traded. It's a long-term weekly chart, but we're looking at oil as it traded back in 2008. All the way to the present. Now, we talked about the fact that we have to go really past these price points here to match the current low that we're having at 31.41, because in all essence, it has broken hard through these most recent lows. And when I say recent, I'm talking about something that occurred 6 years ago, but still it's the last time that we saw oil trade at this price. And even during this tumultuous period, after trading to a high of about 140 per barrel and then dropping below 40, dropping into the 30s, the majority of the lows came in at this price point, but the majority really of the closes in this market came in at around 35 or 36. So we're definitely below that. We're still overproducing oil when we compare it to consumption, and it has caused havoc in the equities markets here in the United States. But an interesting note, and we'll get into this in trending markets, and that is with the dramatic decline in Chinese stocks Monday morning, their Monday, we really didn't see that follow through here in the United States or Europe. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.